Well, good morning everybody, and welcome to the Eurasia session to kick off this week of mining discussions as part of the Mines and Money period. One of the strengths of the London market, I think, compared to the other markets, is the ability of the various players in the market to be informed about what's going on in the world. We have a much broader view, I believe, in the London market of what's happening in parts of Africa and parts of Russia and parts of Latin America, which gives us much more detail, much more informed ability to be able to make effective decisions, to be able to make the right calls in each of the areas. The Russian market has been an interesting one over the last year and a bit. It's had a lot of challenges, it's got a lot of opportunities, and I think that this is going to be a good opportunity for you to be able to find out from the panel here what they think about the opportunities and the issues and the risks of working, investing and developing projects in Russia. The panel today, we have Yanis from Brian Cave. So he'll be talking much more on the legal side. So if you've got any good questions on the legal side, this is going to be strength, but obviously you can give an opinion on broader issues. Robert is an investor, and therefore he knows exactly where the money is and when's a good time to invest and what sort of opportunities he's looking for. Leonid works for one of the mining companies, Orient Mining, so he can give you much more practical experience about what it's like working on the ground. And Sergey is a person of many talents and previously senior person at various banks, Goldman Sachs and others, and therefore understands what is happening as far as the senior echelons, what's the movers and shakers and what's going on. We'll also be bringing in Robin from the floor and Tom, again, two people who are involved in developing projects in Russia. They can give you some real-life examples about what it's like to develop projects in Russia and what sort of opportunities there are, why they've chosen Russia as opposed to other countries for their time and effort. Myself, I'm with a consulting company, been working in Russia for 10 years now, and can give you a bit more information about how things are done and the challenges that are faced in that respect. So, without further ado, we will get started. So I have a number of questions which I'll be asking to the panel, and then I'd like to open up the discussions to the floor, and then at 10:30 we'll be handing over to Robin and Tom for them to give their company presentations. Okay, well, I've just had a question here. So maybe there's some questions from the floor if people are feeling this awake on a Monday morning and ready to get started with that. Is there any particular questions or any themes that people would like to ask? Maybe let's go through a few questions and then let's get the juices flowing and go forward from that. So Robert, as you said, what's your first question, I guess, is what's the current health of the mining industry in Russia? We've had a very turbulent past 18 months, and with sanctions coming in, with the exchange rate going all over the place, there doesn't seem to be a day without there being some issue with Russia being mentioned in the news, and so on now with the terrorism aspect of the bomb and so on. So Robert, I mean, what's your general view, your long picture about the opportunities or the issues as far as the mining industry in Russia?
Number one, we are very positive on the sector. That said, we take a very long-term view, 5 to 7 years. I think mining today, I'm not sure in general, if you have patience, you'll make money. Now, talking about Russia specifically, there's the investor perspective and there's the operator perspective, the company perspective. From the investor's perspective, I think there's still some way to go downwards, and I can talk more about that. But from the operational perspective, it depends on the commodity. If you're in gold or steel right now, i.e. if you have if your revenues are in non-rubles and your costs are in rubles, you're literally printing cash. If you look at Polia's gold in the first half of this year, their all-in sustaining costs were about $607 per ounce. They were selling their gold for about $1,207 per ounce. That's $600 per ounce margin. Annualize that on 1.5 million ounces of gold, it's almost $1 billion. It's $885 million. So as long as you're selling your product in non-rubles, you are literally printing cash because your costs have gone down at least 40-50% with the devaluation of the ruble. Now, if you're a steel producer, you're in a similar situation. If you're iron ore or a coal producer, then you have some serious challenge. From an investor perspective, I think it's going to get worse before it gets better. And that said,
It's more global perspective rather than a Russian perspective.
It's both. Yeah. It's both. I'm kind of talking about the same walk over. I think this game is about patience. If your long-term view is quarters, then this is not a sector for you. If your long-term outlook is 5 years plus, I think there's an incredible number to be made. But you've got to be patient. And if you put money in tomorrow, we may be in the same price range a year or two from now. 5 years from now, I'm highly confident we'll make some good money.
You answered that from the investor's perspective, so I'll move over to the company perspective.
Yeah, just a few words about my background. So I just moved from equity research from investment bank, so I know what Robert is talking, but I can say a few words just if you don't mind. So first of all, just take a look at gold prices in rubles. So today, so they didn't change at all. No change at all. If you take a look at around 18 months or 2 years ago, yeah, exactly. So gold prices, so in rubles, so they changed a lot. We raised around 40%, I would say. So it gave a really good boost to gold prices and to margins for local gold producers. But at the same time, so you should also take a look at some other fundamentals. So, for instance, if you take a look at, for instance, for some of the such fundamentals like we are more focusing at the moment. So I'm not the only guy here, so presenting junior gold mine in Russia. Not the only guy, but so only a few guys actually some junior miners. So we are producing gold at the moment. We are really stringent and we're really tight on capital raising at this moment of time. I understand that in Texas there are many companies also trying to raise some capital, but at the same time, so we're also under sanctions. At the same time, we're also under some very deep pressure from capital, from attitude, and at the same time, so it's not we're not in good moment at this moment of time. And you know that gold prices also dropped in this month by around 10%. So it's not a good moment. We're probably looking for much bigger prices, but it's not a very good situation for all of us. So we should focus more on our own conditions. We should focus more on our own situation. We also switch on capital. We are trying to use our debt. We are trying to become more efficient, but it's not so simple anyway. But at the same time, sanctions. It's not about Russia at all. So if you, for instance, so we see oil prices at about 70, I think, in a couple of weeks. Definitely investments will come to Russia. So I'm more than sure that all investors are more or less cynical, and they will bring more money into Russia anyway, and into mining, oil and gas, and other sectors as well. So it's not about sanctions, it's all about attitude. So I know that in Europe and in other countries, in Sweden as well, so we're trading in Sweden at the moment. They all have almost negative interest rates at the moment. So it's better to invest into healthcare, better to invest into some other sectors. It's not about mining at all. So there's no attitude to mining, no. But when? It's all about the question when. So when? And I think next year, so when you see some, maybe some bottom in copper, we'll see some bottom in other commodities as well, maybe in nickel and some other commodities. So we'll see some hikes in other commodities as well. So in gold as well. So gold is something different. It's definitely different commodities, but nevertheless, we'll see some interest in gold anyway. So it's all about fundamentals at the moment, but
I just want to add, I think you're absolutely right. You break these commodities down into three groups: precious metals, okay, so gold, silver, platinum, palladium. All the commodities have different dynamics, but similar dynamics. The base metals and the bulks. I think that's the way I would look at it as I come downwards in terms of the investment process. You touched on one point about if you read the media, let's call it 1,100 gold, people are telling us it's a low gold price. It's not. It's actually a pretty good gold price. It's up actually over 300. If you look at the average over the last 15 years, it's up substantially. It's a bad price if your all-in costs are $1,105. Absolutely. If you look at someone like Kinross Gold, it's an okay price. If you look at Kinross Gold's Russian operations, which produce less than $500 per ounce, it's an outstanding price. Kinross Gold. Don't quote me. The whole value of that company is the Russian operation.
yes, Robert, I know that you love Kinross very much.
No. It has nothing to do with my love affair with two of the 7 assets they have.
Yeah, okay, right? Go on.
But my point is that you talked about, I forget your exact wording, something about increasing gold prices. If your business plan as an investor, if anyone says to us, invest in our company because here's our 5-year outlook and look at the increasing gold price, they say, I'm not interested. Show me that you have a good investment case at a flat gold price, or even better, a slightly decreasing gold price. And if you can't, then guess what? You're going to have a really hard time raising money.
I think there's a lot of similarity to your point.
Yeah, no, I can tell the investment case very quickly actually. So first of all, so average grade of gold in town in the world is less than 1. Yeah, it's about there. So in Russia we have around 3, I think, around 2. Okay, so from 2 to 3. Okay, so this is first thing. We have very qualified people there. So everybody knows where to invest, where to find mine, where to explore, where to give some explorations or investments. Everybody knows everything. At the same time, we've got no juniors coming there. We got in Australia, in Canada, we got in the US, so maybe in South America, in South Africa, okay, we got that. But at the same time in Russia, okay, we've got some operations where they found a little gold. We don't talk about a little gold, so it's not about a little, it's about an open pit, so Kinross, okay. We got Kinross, they are doing on open pit in Chicago. At the same time, they are drilling in the underground. They don't know about underground anything at all.
They have underground operations.
Underground, some operations, but not in Chicago at all. In Chicago, it's something different. Okay.
So something like that.
Yeah.
I think the key point we're seeing here is that there's obviously the global market perspective as far as the various commodities, but within the Russian sphere, the economics actually, with the devaluation of the ruble, are working quite nicely. Touched on a couple of points. One of the points was sanctions. Dennis, I mean, what's your view of how sanctions are affecting the Russian sphere?
Sanctions are, in a way, have become irrelevant, is my view, for the day-to-day investment of the run of the operations within Russia. But they have had a very adverse effect in promoting or allowing the reforms that are needed by the industry to happen. And I was very encouraged back in 2012 when certain reforms were being discussed and coming forward. And what I see now with the sanctions, other than I should have said actually at the start that the sanctions have affected most financing. Leaving aside the financing, in my view, the probably unintended consequence, at least of the sanctions from the US, Europe, and the various followers, have been to strengthen the political economic elite within Russia, and strengthen that part of the economy which is against the reforms, and which happens to be also the part of the economy that lives off this part of the economy. So it's a sad situation. I know they were supposed to be targeted, the Western sanctions, and the UN has done a lot of work on targeted sanctions. And perhaps they worked well in certain African countries or in Yugoslavia. But it's a completely different kettle of fish. And the sanctions that Russia imposed, and earlier with some guests here were joking about Belarusian salmon, all the fruit, all the apricots turn up in next quarter. But that has actually caused more problems in holding back reform, because it has strengthened the local elite, which is anti-reform.
I think that's an outstanding point, by the way. Basically, what you had, so you shut off external financing to Russia.
Yeah.
Who were the largest borrowers? They were basically the best companies that were a little bit more liberal than
Yes.
some of the more conservative, much more
Yes.
sort of power source friendly. So you've cut off financing to these companies, which have large debts coming due in the next couple of years. They could now go to state banks,
Yes.
who will then decide, here's the criteria, guys, for getting this loan.
And the companies that were in favor always had privileged finance anyway.
So again, we'll bring you in on this point, and I'll move over to Robin.
I think it's a very wide topic in terms of sanctions in themselves. I mean, clearly they affect the technological transfers. They do affect financial transfers, but I think the reason Russia is so far vulnerable to the sanctions right now is because it failed to create its own capital market in 20 years of post-Soviet Union history. And the failure to do so made it so dependent on the Western flows. And I was part of one of the largest deals in Russia by arranging syndicated loans, big euro bonds, big private finance facilities. It was easy. I mean, instead of going and convincing local investors or local banks in the virtues of people transaction, there was a well-developed infrastructure in the West, very clear, obviously good legal support. And from early 2000s, people just went to the Western markets and borrowed huge amounts of money. At the same time, Russia has been exporting capital to the tune of $100+ billion a year. And by various calculations, Russia has exported well over $1 trillion of capital at the same time. So this imbalance is now being rebalanced. I think the companies already paid down 150 or something billions of $1 billion worth of Western debt. That trend is continuing. It's being replaced by the domestic financing, but the quality of the domestic financing is not as good. It's state banks. Some of those banks are loss-making. Obviously, BTB is one good example. Financial economic bank, you cannot really call it a commercial organization. But I think, I'm not saying that sanctions are good, but I'm saying it's the first sort of, it's an alarm bell that lets Russians actually look at the domestic sources of capital and start gradually replacing with the easy and cheap Western capital with something else, something from the internal sources.
So I'd like to now move it over to some of the guys who are actually struggling to actually get the capital themselves at the moment. So Robin, and then I'll pass to Tom afterwards. Robin, what's your experience?
Sorry, Robin, are you struggling? I thought you guys just didn't know capital raise.
Well, yeah. Well, let me come on to the point. But yeah, I just want to speak about. Sorry, my name is Robin Berthold from Silver Bear Resources. I'm the executive chairman. We're building the mine in the far east of Russia at the moment, and so obviously these matters and the sanctions are affecting us. And I wanted to divide them into two sort of levels. One is the bureaucratic cost of dealing with the sanctions in normal everyday business life, which is one of the most difficult things is dealing with our own governments in the West, in the US, in Canada, and within the European Union. There's a series of slightly different sanctions, and the approach that they expect us to have to them is quite confusing in that we will ask, for example, we had a transaction that we were helped with VTB. They're not per se sanctioned other than their access to the capital markets. We had to pay them for the work that they did. We sent our money, obviously it all has to go in US dollars, so it's going through a US correspondent bank, and the bank says, we will not send the money until you can prove to us that you're not breaking sanctions. So then we go back to the Canadian government and ask them, say, tell us what the sanctions are, and here's what we're going to do. Can you tell us whether or not this is in breach of the sanctions? And they say, no, we can't tell you. You have to do it, and then afterwards we'll tell you if you broke the sanctions. So this makes life, as a director of a company, it makes life very difficult when you can't even get a straight answer. So it took us, 8 weeks to make this small payment, a few $100,000. And this is the bureaucratic level that is just, it increases the cost of doing business, it slows all the transfers down, it's making life difficult for us, and quite frankly, I don't think it's achieving the purpose of the sanctions. Or maybe it is, I don't know. If the purpose of sanctions was just simply to grind business to a halt, then it's achieving its effect. So that's on the bureaucratic side. And then on the capital raising side, I can tell you that in the process that we've been going through, we've been very lucky that we have strong domestic shareholders who have supported the company going forwards. We have been in a process of speaking to some of the larger Western banks that have exposure in Russia, such as SocGen, BNP, and UniCredit. These banks all effectively froze all new lending into the mining sector for new business, which, regardless of whether or not that was directly in complying with the sanctions regime, or whether or not it was just a policy choice of theirs, it's obviously closed the market and made it very, very difficult. And then to come on to talk about what you were talking about, Bank and Spare and others, there seems to be different tiers of banks in Russia. There's the tier of banks that are under the direction of the political leadership of the country, who are directed towards large projects that will be eye-catching in the media, or make a large difference. These banks are more or less a waste of time for small companies like us, because when we go to ask them for $50 million or $100 million, they just say, it's not enough, we're not interested. The smaller banks, which are mostly privately run and generally reasonably well run, more akin to Western banks, they are used to being followers in the process, which is a function of, it's partly a function of having depended upon Western due diligence processes, Western law firms doing everything in London, a little bit lesser degree, or some in the US and New York, but mostly out of London. Lots of skilled, intelligent, bilingual Russians in the London market, servicing that market effectively as a foreign domestic capital market in a way. So they got used to following, and now with the situation that they need to lead, they're finding it quite difficult because they don't have the skill base or the experience to lead. We had some discussions, not so much with banks, but with private equity funds, Western ones, but run, the portfolio manager or the PM or whatever was Russian, but not enough experience to know how to negotiate properly with us. And we stumbled over a lot of things that were really just experience-based. And so it has made, I don't know if that was the purpose of the sanctions, was to make everything really difficult, but it certainly has done that. And Tom, I don't know if you want to say anything about it.
Yeah, I guess our experience from the sanctions were felt mostly last year. This year, things have somewhat improved. I hope it continues after this recent difficult. But initially the problem we had nothing to do with the actual sanctions themselves, just investors feeling increased wariness about Russia. Certainly Freeport-McMoran in the early days very concerned about it. But as things progressed into this year, those concerns have mostly gone away. Plus IG, do a lot of our financing internally through a services company. And business is back up this year throughout Russia in the mining sector, off the lows of last year. So our services companies having employment again, so we're able to self-finance better than last year. So from our side, it's actually turning positive this year, and that the government now is very proactive, trying to help, and as we're going through SIL, strategic industry review approval, it's been very helpful for us. So last year was a bit negative, but actually it's kind of working in our favor this year.
So let's turn the question now around. So we've been talking about outgoing in, but how is and I'd like to start off with you, Tom, is going to be with regards to the reaction by the Russian government with regards to changing the law, trying to attract investment, trying to broaden their platform from the oil and gas side. I think it's probably more driven by that rather than sanctions per se. It's more the fact they're realising that they've got too dependent on the oil and gas side and stuff, and with the other minerals industry looking very useful. Have you seen much change with regards to the practice of the government are they more encouraging towards investors?
Absolutely. I think that actually began around 2012, at least for the Far East where we're at. The government became more proactive, trying to change the tax regime, the regulatory regime in the Far East. And then when the troubles began in 2014, they increased the pace at which they were doing that. They have made significant changes to taxes in an effort to bring in investment. The strategic industry review process that our friends over at Moore Minerals Corporation, different company, we're having trouble with, and it took them, I think, 2.5 years to do that. We just started that process about 2 months ago, and we're 3/4 of the way through. So the government's being very proactive. Of course, they need a good story to talk to people, but they also need the investment. And we're rather fortunate in that Malniche is very large. It's a low-grade copper gold porphyry system. Russian companies don't really mine that type of deposit, so because it's extremely large, very important, it's in the Far East, and it requires somebody like Freeport-McMoRan to be involved. They're very helpful. So we've seen quite a bit of opportunity since the trouble.
Yeah, I would just add to that. I wouldn't say there's been much in the way of policy changes. It's been more effective implementation of existing policy. To be honest, for us in Yakutia, we've never really had significant problems or struggles with the bureaucratic process. I mean, it is what it is. It's a tangle and it's complicated. But that's not different or dissimilar to other jurisdictions around the world. But maybe you might say in Moscow, where there's a tendency for things to get blocked, and you need to appeal to a higher authority to unblock something. Not that we've had to. Our process hasn't been going through that particularly very much, but I have the feeling that if we had been going through any processes like that required federal decisions to be made, they would have happened in a shorter timeline than maybe previously. As you're right that there is some concern about the dependence on the oil and gas industry, but quite frankly, it's always going to be the biggest industry in the country, and mining is always going to be kind of an irrelevance. But it doesn't mean that those ministries and federal agencies that deal with us shouldn't be more effective. And there have been some changes in Rosneft around GKZ and things like that, which have probably unblocked the process. Not so much for us because we had our process, but for other participants, especially the smaller international companies who need to follow all the processes correctly, step by step, particularly if they're listed companies. Policies haven't particularly changed, but they've just been being implemented better, is what I would say.
Is that your experience as well?
Not my experience. So I'm more responsible for corporate finance and investor relations. So I'm not so good in some operations and some legal stuff. So I would say, so yeah, we are definitely struggling. Yeah, They're not so sunny, as I have already said, so more focusing on our own operations. They can say that we can make some deals in Russia. So we are actually the first company in Russia which made a net smelter royalty deal in Russia. So we just bought from Central Gold from Canada for 3.5% of NSR from them. So it's very close to us, very close to our assets. So it was the first deal, and we're actually trying to push such sort of deals in Russia and etc. So in terms of capital, yeah, definitely it's very hard, yeah, to raise capital from market. It's not very hard for Russia also. Nobody is interested in commodities at all at this point in time. It's all about fashion, it's all about hot investments, so you can bring some more investments into some, I don't know, some organic healthcare investments, etc. But at the same time, so it's all about commodities, it's all about, so fashion will bring back. I can tell you that around 75% of investors are trying to push to put the deal on that U.S. will raise the interest rate in 6 months, for instance. So I can imagine what will happen actually in 6 months. So in 6 months we will see that gold prices have already dropped. So we'll see in 6 months that gold prices will raise. I don't know. Yeah, it's not about forecast, but definitely we'll get some boost in 6 months. It's all about rumors, but at the same time, so we'll see some. That's very good. More data attitude to commodities in 6 months.
As far as the government actions, I mean, how are you seeing as a...
It's not about sanctions. So it's not about sanctions. So
at the actions by the government, have they responded to not necessarily the sanctions side, but with the devaluation, the drop in oil?
I would differentiate actually. Yeah, it's a good question, but I would differentiate. So sanctions is all about country risk. So nobody loves Russia. It's all about sanctions. So nobody is going to get money. But at the same time...
But wait a minute. Let's be real here. Before the sanctions, was Russia number one on the international investors list to put their money? No. Sanctions came about for a number of reasons. Russia's never been investor friendly. That said, as we've seen with Silver Bear and some of the other companies, especially again Ken Ross, there's some great. You could be if you were an investor in Norilsk Nickel over the last 15 years, you would have made incredible money if you timed it more or less reasonably getting in and then getting out. So there's a lot of opportunity there to make money. Okay. That said, is the Russian government international investor friendly? No, not really. Do they become so when they're desperate? Yeah, absolutely. Are they desperate right now? No, not at all. So you got to look through all these things. And you mentioned another point, the Feds. The Feds has been making for the last 2 years, the noise out of the U.S. has been, we're going to raise interest rates. They more or less haven't raised them at all. They're not going to raise them. And I'm not talking 25 basis points here. I'm talking about 100 or 200 basis points. Nothing's going to be raised there until at least after the elections, the next presidential elections. The U.S. economy, which is one of the strongest in the world currently, is not that strong. They can't actually afford, if you really dig into their numbers, their employment numbers are not as pretty as they look on the face of things. The Fed knows this. If they actually came out and said, we're not going to raise interest rates for the next 2 years, we'd have such a run-up in this stock market, it's not funny. So they can't do that. So what they do is they keep talking about, we're probably going to raise them in the next little while. And they just keep talking about how they're probably going to raise them in the next little while. They're not. But it does put a cap on expectations. So I actually do agree with it. That said, are they going to raise rates? Are we going to see more than let's say 75 basis point rise in the next 2 years?
We're not here for the general market, we're focused on the Russian side.
Oh, no, you can't do that. David, no, you can't do that.
No,
Either you're an international investor and you choose Russia because you think you can make more money there than And so if you're telling me that, well, no, you're a Russian, you're invested in Russia. Well, no, that's a very, if you're like all the equity funds right now that are focused on Russia, yeah, are they having a hard time? Absolutely.
I would actually, so the story is pretty simple, for instance. So just take a look at the market. Okay, so we were just 3 weeks ago, so we were in G20, everybody was happy. So the market was up by 20% just in 2 weeks, just in 3 weeks. After that, so there is this Turkish story, everybody knows about that, yeah? The market was down by around 10%. So it's very volatile, very volatile.
Can I just say something on the reform effort? It's important to understand that the only source of reform in the Russian government, in the Russian kind of politics, is the government. And Robert is completely correct saying that it's very investor unfriendly, but it's probably the most investor friendly among the other branches as well. And unfortunately, the government is the only source of reform, and the government is very subordinate to the other branches, to the president's office and obviously to the Duma. And while the president is very busy with the foreign policy issues right now, it seems that the vital reforms that are necessary are not being even discussed. I mean, obviously the demonopolization, the reduction of the share of state companies in the economy, structural reform, even capital market formation. That's all on the background. So that's I think is. And I guess they're waiting for the commodity prices to recover, and maybe that will happen. But I personally don't see much in terms of reform effort on the whole state kind of agenda.
Again, it's just to round things up.
Yeah, no, I agree with that about the reforms. And you have a very specific, the subsoil legislation reforms and all that, which is technical, technocratic, it makes sense, but it's not making a big difference. It's not being applied as it should be. Also, you have the reforms of the strategic areas and the concentration of the Far East. That's very important, but I'm not sure if it's going to make a big difference unless it's applied nationwide. I'd like to see reforms being discussed, for the Federation as a whole.
Yeah. So you mentioned the Far East, and that seems to be a key part of the platform. And Tom, you were talking about the Far East developments, and this is. There seems to be a lot of noise. Do you see a lot of traction on the ground? So other than changing some of the tax aspects, is there actual other elements, like is the government co-investing and developing up the infrastructure and making more practical steps towards helping investment, or is it just more an encouragement building?
Well, we'll soon see. We signed an agreement with the Far East Development Fund about a month ago. And they were set up by the government, through Special Common Bank, to bring in investments, mostly from Asia, and then to match those internally. So I guess I'll know soon enough.
I would add to that. I was actually going to make this comment right before you made your comment, David, that out of all the noise coming out of reforms and support and all this, actually the Far East is one that we actually see as being real. We deal a lot with the Russian Direct Investment Fund. Most of the opportunities that they want us to join them with are in the Far East. I think the government as a whole has realized that there's incredible potential there. It needs to be unlocked, and the way to unlock it is infrastructure. Russia's always been challenged by infrastructure. I think they realize that. And as you mentioned a couple of minutes ago, there's a lot of challenges to investment, especially foreign investment. But with the Far East, I think that is in place. And the Russian Direct Investment Fund has got actually a sub-fund with China, which is 1-to-1, which is actually very supportive.
Yeah, I would agree with that, because Far East Fund is very active at the moment. So they bring more roads, they build infrastructure, so they invest anyway at this moment of time. So you should just probably, I don't know the story, but nonetheless, so there should be something.
Yeah, I think I probably side with Tom. We have to wait and see whether or not actually anything particular happens. We have, I would personally say that the infrastructure in our part of the Far East, in Yakutia, is pretty impressive considering. If you went to northern Canada, you would not find that kind of infrastructure at all. However, the maintenance and the upgrading of certain parts of infrastructure, leaves something to be desired. And the Far East funds and the directives are supposed to address that. We look at the road and nothing happens, So, and we know the money is getting spent. Well, it's getting paid, but it's not getting spent. So, we'll see what happens in reality. But in terms of general infrastructure, if you look at, I don't know what the governorship of your republic is like, but our republic, the governorship is pretty good. And so they're able to, because of the wealth of the republic, they're able to run their own infrastructural programs, and of course they have been, there has been significant federal support for that, and some very large federal projects like the extension of the northern spur of the Trans-Siberian all the way to Yakutsk. I mean, that's an enormous change. That means you can rail everything directly to the railhead in Yakutsk, and they put a fiber optic line down the cable. It means we get 30 meg broadband in the hotel. All this is an enormous improvement. And they have a program for the extension of the electricity network, and et cetera, paid for by Republic funds. But it is an absolutely enormous republic, and it takes time to do these things.
Just to follow up on both your comments, which is, let's see. We're actually seeing it. We're just seeing it for the companies that are friendly, that are, number one, Russian, number two, friendly with the government. So those companies are already accessing these funds for infrastructure. Let's see if the table actually becomes a little bit fairer, and some companies that I'll argue are more productive than some of the other assets where this infrastructure money is going into will get financed.
Yeah, I mean, certainly our view in terms of RDIF and RCIF is completely incapable of making a decision. Lots of people, lots of action, no motion, but that's possibly, they are quite new. It takes time to work out what your investment strategy is and how to make decisions in Russia, with a very hierarchical system, and more focused on very large investments as well, which, it's a critique. You can't have a domestic capital market unless you've got small companies investing. And from small companies come big ones. That's the normal process in capitalism. It's only the post-Soviet period where you had large enterprises that were privatized and instantly became large enterprises. If you look back in history at our gold mining, look at all of our gold mining companies, Kinross is probably $100 million in the 1990s. Barrick, the same thing. It started as a $100 million company in the 1990s. These companies started from absolutely nothing. Of course, there's thousands that fail, but some of them are successful, and you have to have an efficient, trustworthy capital market to feed that. And the problem is when it's not domestic, the slightest nationalistic incident happens, and it withdraws immediately. But if you got the U.S. and Canada, they have their own domestic capital markets. They don't withdraw from those sectors on those kind of things. They'll withdraw on sentiment of gold or whatever, but not on sort of foreign policy type decisions.
One of the things with developing the Far East aspect, I guess one of the key points here is how it's linked to the Asian markets in general, the China story, as far as both being an investor, being a supplier, as potentially also a competitor. But not just China, it's also the Korean, Japanese markets as well. All right, Dennis, as far as your views on the China's or the Far East aspects, how is that changing the dynamics on a practical basis, not just a practical investment?
Well, I don't know as much on the practical side as Robbie would, for example, but what I see from someone who offers services to the industry, the Chinese input on investment seems to be slow. I think people had expected something more, something faster, but it could be, I think it is a result of China having grown up, having matured. They see themselves as a world player, and I don't think they're going to invest in Russia simply because of the Russian government's policies are opening up the eastern territories. Russia, as a recipient of inward investment, will have to compete with the rest of the world to the eyes of the Chinese funds. And I think that's why things have slowed down.
Yeah, not only that, you should add to that is the fact that the Chinese are digesting a large number of acquisitions that they did probably between 2006 and 2010, maybe a little bit 2012. They acquired a lot of assets all around the world, and if you look carefully at those assets, a lot of them have achieved very, very little. It was one thing to buy them, it's another thing to develop and operate them, and it's a learning experience for them as international operators, particularly if you've looked at anything in Africa recently. There's a lot of empty fields with lovely signs and not a lot of activity going on. We certainly see, look, buying equipment from the Chinese is fine. You keep your eye on the quality and make sure it's done properly, and then you're okay. It's much cheaper than anybody else, but investment is very hard.
But are you buying Chinese equipment, or are you having Chinese banks finance you buying Chinese equipment?
No, we're buying Chinese equipment.
Without the Chinese financing?
No financing.
I remember when Western banks came to Russia in the early 90s, and they were primarily driven by opportunity. But even then, it took them more than, maybe more than 10 years to grow their assets to a couple of $1 billion in Russia. The Chinese have come to Russia mostly for political reasons, because obviously they're either party officials or somebody suggested that they move into this jurisdiction. But it's been a couple of years long. So I expect that they might become active, but not earlier than a couple of years from now, because I have friends who work for China Construction Bank in Moscow. There's basically prospecting the territory, meeting people, getting to know clients, but not lending aggressively.
I would say that the Japanese and Koreans are much further advanced, but much lower profile. In our building, I think we have Samsung in our building there, and they're just quietly operating in the heavy industry, or maybe it's Mitsubishi and heavy industry, whoever it is. They're just quietly operating. They're selling equipment, but they have no grand plans for huge investments. They just like a normal Western company selling their equipment.
I'd like to open up to the floor. We have about 5 minutes before we start going into some of the company presentations. Andrew, you have a question?
Yeah, just a good question. It's to do with the practical aspects of the changes in pricing. What's happening actually to the real operating costs in mines in Russia, in the Far East? Are they going to change? Are they going to go up? Is it going to be inflation? I'm talking about power and diesel and structure.
Yeah, there's a question here about the devaluation of the ruble, which partly answers your question. So the devaluation of the ruble, the way, I don't know, and Tom probably has a similar experience, the way it's affecting us is, really, if you were to graph it, you can correlate the price of oil and the price of the ruble almost perfectly, because if anybody who lives in Russia can tell me, I think it's 35 ruble or 37 ruble a liter. This has not changed at all from more than a year ago. So even though the price of oil is halved, or more than halved, the ruble has done exactly the opposite in the other direction. So any item that you purchase that is driven by a world market price, you've seen. It depends on whether it's fallen or not as a commodity price, or if it hasn't, then it's gone up for you. So you have these competing tendencies, and on balance, I would say it has been better for us, because a large component of the largest component mostly for mining is fuel, and that stayed the same, so nothing has happened there. But the other component, which is large, is labor, and our labor costs have not increased. Inflation is starting to creep in. We're starting to, like our employees are complaining about wanting to increase their wages, but it hasn't really got going too much yet. So in general, I would say that it's been on balance positive for us, the devaluation of the ruble. But concrete, steel, anything like that, it hasn't really had any effect. It hasn't got cheaper. The price has changed immediately.
In terms of the actual gold price and other production, revenue?
You mean the cost of production?
Yeah. How does the cost? I'm trying to understand.
It's come down probably slightly.
For a gold producer, just give an example. Let's assume that half your operating costs in rubles, so that price has come down 40 or 50%.
Yeah.
The other half is more or less remain the same.
Or gone a tiny bit.
Actually increased.
Yeah, or maybe going up a tiny bit.
You're buying reagents. Those are usually priced. They're practically priced in dollars.
Yeah.
And they move very quickly. They adjust very quickly. Are you going to see inflation in the pipeline with this devaluation? Absolutely.
So maybe 15 to 20%
Yes,
savings.
from my side, I can tell you that from 20% margin with cash cost of around 90, so to 50%, so on average for a gold producer. around that.
Okay, so
On average, yeah. Some more effective, some less effective, some less on average, only around 50%.
we have time for another question. Okay, it looks like we've been successful in answering the various questions, so thank you very much indeed. I'd like to just give your appreciation to the panel.